to make sure their computer systems can deal with the year 2000 transition. Millions of computers contain two-digit data fields, making them unable to read the year 2000 correctly. Of the many companies promising to cure that headache, Seek Incorporated is trying to stand out in the crowd. Its products currently support major programming languages that account for 94% of the world's so-called legacy applications. And a recent licensing deal with IBM proves then that at least one Wall Street giant is putting its faith in Seek. The company, trading roughly 3 times higher than its January offering price of $7.25, is closing in on its 12-month high of 24 and change, climbing 1 7/8 yesterday to end at 22. Joining us now with his secret to success is Ravi Kokka. He is CEO at Seek Incorporated, and he joins us from Pittsburgh. Mr. Kokka, good to see you. Thanks for being with us this morning.
Good morning.
What are you doing differently than the other companies associated with the Millennium problem? What is it that you are providing companies that use large-scale computing to solve the year 2000 problem?
Well, the major difference is that when we started as a company in 1988, we knew that the mainframe systems, what is called the legacy systems, which most large corporations use, we knew that these systems had to be maintained, redeveloped, and eventually, fixed to get into the newer technologies. And so we built a technology which was very robust, which could build a repository and help people do automated maintenance solutions. In 95, when the year 2000 problem started surfacing, it was a very natural application for our technology. So I think the main differentiator is that our technology was not just built for year 2000. We not only solved the year 2000 problem, but you can do all of the other maintenance and documentation tasks, which are very crucial to maintaining these legacy systems.
We haven't had too many conversations about the year 2000 problem in the last couple of months. Can you update us on the severity of the problem? Some people say it could cost hundreds of billions of dollars to fix, and others suggest that there might be a simple solution out there somewhere that kind of obviates the need for a really aggressive approach to solving the problem.
No, I think there is a consensus now that it is a major problem. It affects every company in the world. It is in the hundreds of billions of dollars as far as estimates are concerned. Gartner Group, which was the first one to estimate, had put it at $600 billion. More recently, we've seen numbers like $100 billion that's available to companies like ourselves, because quite a bit of the cost will be actually incurred within the corporations by realigning their information technology budgets. So it is a severe problem. It affects every company in the world. And it has to be fixed with a very fixed timeline. You have to fix it, with less than 1,000 days left to fix the problem.
Eric?
Mr. Kokka, my question pertains to the prioritizing of the business. Do you do it on a first-come, first-served basis to the customer, or are you prioritizing it per industry, because the clock is certainly ticking?
Certain industries are affected more than the others. So the banking insurance sector, that's one of the primary sectors. There's a lot of activity there. In fact, it is a priority area. Then you have the telecom industry, and then you move on, the manufacturing, retail, and other industries. Every company is affected, but I would say that in terms of priority, the financial sector, telecom, manufacturing would be the top businesses that are affected.
How much of that $100 billion in money available to companies like yours do you expect to capture?
Well, it's a very difficult thing to guess at this point, but it is broken down largely into services and tools. So we supply a product and services related with the product to help companies solve the problem. So the 100 billion, roughly 70 billion is for services. 20 to 30 billion is what is available for product companies like ourselves.
All right. Now, how many contracts do you have, and at what dollar value do you have?
These are not contracts. We sell a license. Our software is licensed to end users in Fortune 1000 corporations, like a bank or an insurance company or a steel company. On an average, our pricing for an end-to-end license would range somewhere between $150,000 to $500,000. It depends on the number of units of software license, the size of the portfolio. And if it is an IBM or a Unisys that uses our software in a factory-like environment where they are actually solving their customer's problem, they pay us a royalty, which is per line of code, and then that varies based on volume.
All right, then for investors not entirely familiar with your company, can you tell us what kind of profit and revenue growth you expect going forward?
If you see in the last 3 or 4 quarters, we've had tremendous growth. The first quarter, we had, if compared to the corresponding quarter, we had a 426% growth in revenue. We had 13 cents earnings in the first quarter, which was up from 1 cent in the corresponding period in the prior year. We continue to see this year, if you look last year, total we did $2.7 million in revenue. This year, the analysts are projecting roughly about $11 million, which is almost 4 times what we did last year. There is an opportunity to, the only constraint for us is how quickly we can build our sales and marketing infrastructure worldwide. So there is an opportunity to even do better, but it is something that we have to see how the market shapes up.
All right.
The following year, again, we expect similar kind of growth. The analysts are projecting about $20 million.
All right, Mr. Coca, good to see you. Thanks for joining us. Appreciate you coming by.
Thank you very much for the opportunity.
Ravi Coca is the CEO of Seek. Coming later in the program.